In market news now, the rand is slightly stronger against a weaker dollar ahead of the Reserve Bank's main interest rate decision, which most analysts expect to be a hold after 10 consecutive hikes. The dollar fell against all of its group of 10 counterparts, and a gauge of the dollar extended its month-to-date weakness to more than 6% on the back of speculation that the Federal Reserve's hiking cycle may have peaked as inflation eases. Meanwhile, globally, investors are looking ahead to key central bank meetings next week, and at the same time digesting disappointing earnings from Netflix and Tesla, which have pushed Wall Street futures lower. To give us some perspectives, we are joined by Ricardo Smith, who is the Chief Investment Officer at ABSA Investments. Ricardo, thank you so much for your time. Your sense of local markets right now ahead of the interest rate decision?
Afternoon, Natasha. Thanks for having me. In terms of markets today, quite a bit of sideways movement. So, no strong rallies or pullbacks. We are seeing some positivity in resources. They, have been down, particularly with some disappointing data from China. So clawing back some of those losses, but still negative, on a year-to-date basis. Then in terms of, the other sectors, a lot of sideways movement. But, materials and platinum really leading the day today.
Given the data that we've seen come out of the SA economy recently, if you had to be in the room with the MPC right now, what would you be advocating for? Is it a pause or another 25 basis point hike?
I would certainly, be advocating at this stage. We've seen quite a lot of aggressive rate hiking. Inflation is range bound at the moment, so is core inflation. And in fact, core inflation has been range bound for quite some time. And from a interest rate differential with the US, we've also seen a pause in the US, which does speak to some potential pause locally, particularly given that most of our inflation is imported through the currency, and we've also seen some strengthening of the currency. And so certainly looking for a pause.
Let's take things stateside for a bit. You look at the U.S. market, especially the rally we're seeing in the S&P 500, for instance. What's driving this? Is it, the idea that, it's earnings or corporate fundamentals, or do you get a sense that perhaps there's a big macro bet here?
It's a combination of these things. I think firstly, a lot of these counters this year are coming from a low base after the drawdown last year. So there is a bit of sector rotation from some of the sectors that rallied last year, like healthcare, to some of the tech and consumer discretionary counters. We have seen some positive earnings on aggregate. Only 60 counters from the S&P 500 have filed their earnings, but some positive growth. Some here and there, like Netflix, disappointing. But still, positive earnings growth happening there. The pause in interest rates by the US Fed, I think markets starting to discount, a near-term end to the hiking cycle. Though we do think that, the US Fed probably has one or two more rate hikes in them. But, markets rallying quite aggressively and responding positively to the pause, that we saw.
Speaking of U.S. earnings season, how low were expectations going into this earnings season?
Look, it is a tough one. I think a lot of the pessimism was aggressively priced last year. So on the one hand, you're dealing with attractive valuation from the pullback. On the other hand, you've got a very resilient, consumer in the US with excess savings from the COVID-19 pandemic. And so those excess savings are still there. So spending is still happening in the US. And on the other side, you've got fears of a recession over the next 12 months. So it is a tough macro, economic environment to balance out in terms of all these various signals, that are happening in markets. But certainly consumers have been resilient. A lot of companies had more pricing power than what was initially anticipated. And, earnings growth continue to be positive despite this aggressive rate hiking cycle.
I mentioned in my intro in terms of where the dollar is, especially looking at the dollar index. Have you given much thought in terms of the performance of the dollar recently and where to from here?
For sure. So the dollar has strengthened quite a bit over the past couple of years, past couple of months, with the aggressive monetary policy in the US and also some risk-off sentiment it is seen as a safe haven. So with the idea that, markets are seeing an end to that hiking cycle, there is a bit more risk-on environment, and you've seen dollar weakening and you've seen rand strengthening against the dollar. But also, an easier monetary policy, in the US would definitely advocate for a slightly weaker dollar at the current level. But Marx reiterates that, we still think there is one or two more rate hikes. So there'll be a bit of volatility in the short term, but definitely longer term, there's, a lot more prospect for rally and a reversal of some of the strength that we've seen recently.
Ricardo, thank you so much for your time this afternoon. That is Ricardo Smith, who is the Chief Investment Officer at ABSA Investments. Looking at the rand right now, about 17.77. We're about 0.5% stronger ahead of that Reserve Bank decision.